Belle compagnie Mineros. J'aimerais aussi que Anne, tu nous expliques comment tu as rejoint Mineros. Alors, Anne, elle comprend le français, mais elle va quand même s'exprimer en anglais.
Je suis désolée. Je ne parle pas français suffisamment.
On est indulgent.
Par contre, toutes les remarques négatives, elle les comprend.
Thank you, Laurel. You'll have to excuse me. It's been a pretty hard run through Europe, so my voice is off and on this morning. So I'm hot water and honey, and hopefully that'll get me to hold in here. About 15 months ago now, I had an executive recruiter reach out to me and ask me if I would look at this company. And I looked at this company, and it was a 50-year-old gold producer producing more than 200,000 ounces a year, and it was a dividend payer, and I had never heard of it. Now, I've been in the mining industry longer than I'll confess to. I started on the base metal side of the industry in zinc and copper with polymetallic ore bodies, and then switched over to the gold space. But this was a new company to me, and I didn't understand the valuations. So I didn't know whether it was because nobody knew of the company or whether there was a problem with the assets. So when I dug into the company and when I accepted the opportunity to join the team, what I found in talking to investors in North America and Europe is that no one knew who the company was. So we've spent the last year and a bit working really hard to raise the profile of the company. So this is a company with a long track record of profitability. Accordingly, we paid a dividend for 4+ decades, with 2 exceptions in the 90s when the gold price was quite low. We have 2 operating mines in Latin America, one in Colombia, the first operation, and the second is in Nicaragua, and we bought that in 2013. We believe in the assets that we have in Colombia and in Nicaragua, that we have growth opportunities in the vicinity of our mines. Plus, we have a clear view of what it is we want to acquire if we're going to grow inorganically. We have strong social license to operate around our mines, and we have an experienced management team. So I'm gonna kind of set the stage or give you context. So this is the first quarter for the company. These are all in US dollars. So we had $160 million US dollars in revenues. That translated into 38 million in earnings, or 13 cents a share. We have just under 300 million shares outstanding. We had negative net cash flow of 1.1 million. If you contrast that to the first quarter of 2024, that was negative 1.9. One should ask the question, why would you have negative net free cash flow in this environment and earning this much money? And the reason is our taxes are front loaded. We had really high accounts receivable at the end of the quarter, and we had some CapEx that we spent. So the average price that we sold gold at in the first quarter was $28.81. When I talk about trailing numbers, the average price that we sold gold at in 2024 was $23.87. So that'll just give you some context. So we're sitting in a gold market environment that's about $1,000 an ounce higher. On the balance sheet, we had $81 million. We have 28 million sitting in debt in Colombia, denominated in Colombian pesos. We're often asked why we haven't paid that off, given it's a little bit higher interest rate. The debt was acquired when we refurbished one of our hydroelectric plants that feed our dredges in our alluvial operation, and it's tax effective to leave it sitting on the balance sheet. Adjusted EBITDA for the first quarter was about 71 million, and for the trailing 12 months was 240 million. So the stock closed Friday at 233, which gives you market cap, a Canadian dollar market cap, and this is important, of about 680 million. So converted into US dollars, that's about 490 million. When you look at your screens, you will see a dividend yield that does not compute because they don't, the data aggregators don't convert our share price to US dollars before they calculate the yield. And so the yield's just wonky. And people ask me about it all the time. So that's why I know to caution you. And our return on capital employed is about 40%. So when you take a look at the 240 million trailing EBITDA, at that 490 million US dollar market cap, we're trading at just a little bit over 2 times EBITDA. And if we go back to the net free cash flow, the trailing 12-month cash flow would be about 87 million. So we're trading about 5 times free cash flow, just to give you some financial metrics. As I indicated, we are a dividend payer for...
Je fais une pause là, c'est des chiffres incroyables, 24 fois, on est à un PI entre 3 et 4, on paye 4 fois le free cash flow, ça se voit sur uniquement certaines sociétés européennes, des petites capitalisations comme ça, c'est des chiffres qui sont absolument incroyables en termes de valorisation. Voilà, le calcul que j'ai fait sur la NAV, c'est-à-dire la NAV par rapport à l'enterprise value, on est à 4 ans, on va au bout de 4 ans obtenir déjà tout le free cash flow qui a été généré si la société reste comme elle est, c'est-à-dire en essayant d'imaginer qu'il n'y a rien qui va se passer, alors que David est là pour justement la transformer. Donc, pour moi, il y a un gap de valo sur cette valeur qui est absolument incroyable. Là, c'est vraiment, il n'y a même pas de risque à prendre, puisque si l'or ne baisse pas sous les 3000, rien que l'effet de rattrapage devrait nous ramener une valorisation qui est proche des plus grosses sociétés européennes. Et on est complètement dévalorisé. C'est le problème de ce secteur, c'est que les petites capitalisations, elles sont complètement hors des circuits, hors radar, et il y a un effet de rattrapage à envisager, parce que c'est les petites capitalisations.
So here you can see that we've been paying dividends. This is the last 14 years. Last year we paid we came to the AGM offering up a 7.5% dividend in Colombia. So Mineros is domiciled in Colombia and traded in Colombia and on Toronto. So we came to the AGM with the offer of 7.5 cents, and there was a bit of negotiation with the shareholders, and we ended up paying an extra 2.5 cent special dividend. This year we came with a 10-cent dividend, and that was passed at the AGM. Important to note, because we're often asked about this, would we ever discontinue the dividend? And I would say never if we had an acquisition that made sense, that we wanted to deploy the cash elsewhere. I will point out we acquired Hemco, the second asset, in 2013 and never discontinued the asset. We managed to onboard that and continue to pay the dividends. So I've pointed out that we've got 2 assets, one in Colombia and one in Nicaragua, and I'll start by just kind of showing you the production profile of each and their cost basis. So in Colombia, we expect to produce between 81 and 91,000 ounces of gold this year. In the first quarter, we produced just over 23,000 ounces, and we did so at $12.95, which was below the low end of our guidance on all-in sustaining costs. So the question is, how did you manage to do that? Largely because there were more ounces, so your denominator is bigger, and largely because the Colombian peso had been weaker than we had originally budgeted for. Turning to Hemco, we produced just under 31,000 ounces, which leaves us right on track to produce 120 to 132,000 ounces. We did so at all-in sustaining costs at $18.55. Your next question will be, why is that above the high end of guidance in this country? About 70 to 75% of our production in Nicaragua comes from toll milling rock that artisanal miners sell us. We pay the artisanal miners 40 to 45% of spot price. So as the spot price rises, our costs are indexed to that rising price of gold. So if gold rolls over and comes back down at $2,000 an ounce, we would pay an artisanal miner about $800 an ounce. At $3,000 an ounce US, we would pay them about $12. So you see the margin stays pretty static, but the costs do rise, and we had budgeted significantly lower gold prices for the year. So to start with the first asset, so Nichi is located about 190 kilometers north of El Bagre. It's about a 30-minute flight in a small plane. It is got about 1.35 million ounces in the proven and probable category of reserves. We've got an additional 1 million ounces in the measured and indicated category of resources. That would equate to about 12 years mine life. This operation looks like a mineral sands operation, and I'm just going to play a quick video to kind of give you a sense. So we're working in closed ponds beside the Nichi River with 5 big bucket dredges, and what we do is we work this ancient alluvial plain that has gold, free gold, that's just washed over the Andes over millennia. So it's sitting in this flat kind of manto structure, but that's not the right word. A geologist would fight with me on that terminology. But there's about 10 to 12 meters of overburden, and then you've got this 12 to 30 meters of rich sands with free gold in it.
Vous êtes allé voir le site de production de Mineros. Well, I switch to English. Thank you very much for being with us today. Laura is going to introduce you and your 2 producing mines in Colombia and Nicaragua. Laura, c'est à toi.
Thank you. Thank you for coming. I'm so pleased to have you here for this presentation of Mineros with such a large crowd. Please let me introduce you Anne Wilkinson, which is very well known in the mining industry. She's going to present herself, but before presenting Mineros, I want to say you a few things. Anne has some kind of problem with her voice. It's exactly like mine. We got some virus. We have been around Europe for a couple of days. Anne has made 5 roadshows in 8 days. 5 cities in 8 days. So if anybody wants to start a betting line on whether my voice will last through this presentation, whether it fades or whether it lasts at all, now would be the time to take your bets. So, and we have the immense pleasure to have the new CEO of Mineros. You know, it's a great surprise because when I organized with Anne this meeting in Paris, David was not in the loop.
We are very proud to offer you the ability to challenge David Lungo, which is the new CEO of Mineros. He has been on board for 5 weeks. Very challenging position for this new company. David has been involved in many projects as a CEO, as an operator in Angola, in Barrick. He was one of the big engineers in Barrick, and last couple of years he was involved in the American project of Ocean Gold. I don't know if one of you is a shareholder of Ocean Gold. Ocean Gold is a beautiful story. It's an Australian company, and the part of the company sitting in the United States, the Hale mine, it's David's success, and so it's very promising for the avenue for what's coming next for Mineros. We have an engineer, an operator for the company to grow. We're gonna see Mineros has completely changed the way it's gonna evolve in the coming years. So I'm very happy. We're going to talk about many things. There are many subjects. Don't hesitate to ask any questions regarding environmental, ESG, numbers. We have plenty of stuff in this presentation. I'm going to let you guys go ahead with this wonderful presentation and explain the challenge the investors are facing. Thank you.
Good morning, everyone. As Laurent said, I'm David Londoño. I'm the new CEO for Mineros. I started second week in April, so I'm on my 5th, 6th week now. I'm a mine engineer by background, and I've been working in mines pretty much up until underground mining all my life. Spent the last 35 years in the United States. I'm originally from Colombia. I spent the last 35 years in the United States working across different companies and different commodities, but in the last 15 years, been mainly gold. We've been working in areas like northern Canada, where you have to be very environmental conscious. When there is lots of water, lots of green, and lots of fauna, so you have to be very protective of the environment at the same time that you're doing your mining. Been very successful with that mine in northern Canada, the Gold mine, for those who are familiar with. Was very successful with a mine in Zambia, with a mine that Barrick owns, a copper mine, Lumwana. And then last time I was very successful also turning around our Hale gold mine in South Carolina in the United States. I got a call from Mineros, late last year, and they asked me if I wanted to come back to Colombia to lead the company. And knowing when I was a college student, Mineros was a great company in Colombia. It's still a great company. So just talked to my family, and I told them, what a great way to finish my career is just to go back to Colombia and lead Mineros into the next phase of growth, to the next phase of profitability and production. So we're gonna start with the production of how the Q1 went and the last 2 months. So I'm gonna let Anne got it. Okay. Quietly into retirement. But when I got the call from Mineros, I thought for myself, what's the best way for me to return to Colombia? I'm originally from Colombia. So what is the best way for me to return and push this company into the future? And that's why me and my wife decided, okay, let's go back to Colombia. This is a flagship gold mine in Colombia that is being pretty much at the same level for the last 10 years when we acquired Nicaragua. And so let's bring it into the next level. What is that next level? For me, it's getting to 500,000 ounce producer. So how do we get there? That's a challenge. And that's my plan. But that's why I decided to leave that cushy job in the US and move to Colombia and take the helm of Mineros. Mineros is a great company, and it's gonna be even better now that we are going to optimize performance. We are going to rationalize costs and make this company part of the future of Colombia and the future of gold mining. So thank you for the introduction.
So I'd like to thank each and every one of you for being here today. We're really pleased and proud to present this company. I've been in the mining space for longer than I will confess to, and been associated with a lot of underground mines. And when I first appeared on either of these mine sites, I really hadn't seen anything quite like it. So I'll just walk you through that in the next 30 minutes or so. Order numbers. So when I quote financial results, they're in US dollars. When I quote the share price, it's in Canadian dollars. So any of you who go to your Bloomberg terminal or any other terminal will see a dividend yield that does not align, because the data collectors don't understand they have to convert the Canadian dollar to US in order to appropriately get the yield. So in the first quarter, we had 160 million in revenue, which translates into $38 million in earnings, or 13 cents a share. We did that at $28.81 gold on average, and we had negative net free cash flow of 1.1 million. Now, you guys are all financial people, and you want to understand why in heaven's name would we have negative net free cash flow with this much money, and making this much money at these gold prices. We had about 44 million in accounts receivable, and we had quite high inventories on the balance sheet. And accordingly, we have our cash tax payments are front-loaded in the year, and we had a bit of CapEx. So if you fast back 1 year, the net free cash flow in the first quarter of 2024 was negative 1.9 million. So if you take a look at the last 12 months, we had net free cash flow of about $87 million. In cash, about $28 million US. In debt, it's denominated in Colombian pesos and sitting in Colombia. We often get asked whether we'd be inclined to prepay that, and we say no, it's tax effective to leave it there. We acquired the debt as we refurbished one of our hydroelectric plants. So we've got that sitting there. In the first quarter, we had about 71 million in EBITDA, and the trailing 12 months was 240 million. Stock closed at 233 on Friday, which gives you a market cap in Canadian dollars just under $700 million. So we need to convert that to US dollars. So let's say a 490 million market cap, which means that we're trading at just over 2 times trailing EBITDA, or we're trading at around 5 times net free cash flow. I mentioned that we've been a long-term dividend payer, so 4 decades. Last year we paid 10 cents, and this year we will pay 10 cents. We often get asked whether we'd ever discontinue the dividend, and the answer is never say never. I will point out, though, in 2013 when we bought Hemco, we acquired the asset, improved the asset, and never discontinued the dividend. And the current dividend yield would be about 7%. So 2 operating assets, the first in Colombia, and I'll discuss it first, and the second in Nicaragua. But first, I want to go through the production. So for the year, we expect to produce somewhere between 81 and 91,000 ounces in Colombia, and we expected to produce that at about 1420 to 1520 all-in sustaining costs. So we actually produced 23,000 ounces of gold, and we did so at 1295 all-in sustaining costs. So the question should be, how did you manage to get your costs below what you thought they were going to be? Well, 1, there was more ounces, and 2, the Colombian peso was weaker than we had predicted. In Nicaragua, we produced just under 31,000 ounces of gold, and we did so at $1,855 all-in sustaining costs. The next question should be, why are you above the top end of your guidance? And the reason is about 70 to 75% of our production is because we toll mill artisanal mining rock that they sell to us. So we pay them 40 to 45% of the spot price, which means that our costs are indexed to the price of gold. So we didn't expect gold to run quite so hard and quite so high. And so accordingly, our all-in sustaining cost for that portion of our production is above what we expected. This is a company that's 50 years old, and it's been a dividend payer for more than 4 decades. Originally, it was listed in Colombia, so it's been listed in Colombia for 43 years and listed on Toronto for 3.5. We have 2 assets, 2 operating assets. The first is in Colombia, and it's the oldest. We've been operating it for 50 years. And over the last 100 years or so, there's been about 9 million ounces of gold taken out of this deposit. We acquired our second asset in 2013. It's the Hemco property, and it's in Nicaragua. We do believe that both of our assets have organic opportunities to grow, and we have a clear vision of what we think inorganic growth would look like. We've got a strong social license in both of our jurisdictions and an experienced management team. So when it comes to organic growth, I'm going to let David talk about this because he's been quite excited since he arrived about some of the things he's seen.
Just before we go into this, when you look at the company has been in business as Mineros for a little bit over 50 years. And most of those 50 years, the company actually has been profitable. And what happens when a company makes money year over year? People become complacent, become lazy, people don't care about the costs. I'm gonna make money anyway. So people don't care about performance. I'm still gonna make money. So that's my first order of business. I already visited both sides in Colombia and Nicaragua, and so a few things that I've seen, I know we can go and rationalize our costs. And that's, for me, that's the first order of business. Let's rationalize our costs in both of operations, and let's make sure that we're getting everything that we can. So we're going to increase our gold production by improving our performance, our productivities, and by improving our recoveries. So once we do that, then we can actually go and make the company grow outside. So in Nicaragua, if you look at the purple lines and the green lines, we have about 165,000 hectares in concession. But we actually work where you see the yellow lines out there, that's where we work. And it's about 12,000 hectares out of those 165,000 hectares. So one of our mines on the northeast side is the Panama mine, and next to it, about a kilometer down south, we have the Pioneer mine. So with those 2 underground mines, we feed 3 mills, and that in conjunction with the artisanal miners. So we feed those 3 mills. The mills are almost 100-year-old mills. They require a little bit of capex to make sure that they keep operating year on year. But if we keep on going down southwest, we found another deposit in there. That deposit is called Porvenir. Now, Porvenir, it was found a few years back. We've been doing the PFS analysis and also applying for the permits. We actually got the permit to operate that mine a couple of weeks ago. So now we are just finishing the PFS for the process plant, and we are going to apply for the environmental permit before the end of the year. Now, why are we thinking of building a new plant? We have different metallurgies. We have zinc present in the ore. We have silver, and the whole thing in Nicaragua has silver. And we may have copper too. So we are going to we're going to build a new plant that we are going to be able to process all these minerals out. So that porvenir mine is going to bring about 50 to 60,000 ounces of gold. It's bringing about 110,000 ounces of silver and 38 million pounds of zinc. We haven't analyzed the copper yet because it's something that we found in the last few weeks. We're doing the metallurgy and we're doing the analysis to see if economically we can extract copper concentrate. Now, when I went to Nicaragua, one of the things that I asked, okay, show me the layout of the plant. Oh yes, we have a 2,000 ton per day plant that is going to be set on one side of the mountain. Okay, what if tomorrow the company decides that we're going to go to 3,000 ton per day plant? Or we just build a new plant? Well, it doesn't work that way in the real world. In the real world, what you do is you build a plant, and if you expand, then you just have an add-on. You're going to add a mill, you're going to add tanks, or you're going to add whatever you need to add, but you don't go and build a brand new plant to expand. So the mandate is that let's make sure that we have a design where you can, if you need to grow to 10,000 tons, that you can go and add. Let's make sure that we optimize the space that we have and make a layout that is going to help us expand the company and the area if we need to, and if we decide to, and we see a benefit on doing that. So this is the first order of business for us too, is that we're going to grow organically, and with this we can bring Nicaragua to about 200,000 ounces. Now, in Colombia, we have about 50,000 hectares in concession, and we have those concessions in perpetuity because we've been working in there since the early 1900s. So when the constitution changed and when the laws changed, we were grandfathered in. So we actually own the concessions and forever. Now, we have a lot of land to explore. When we started mining at the upstream on the river, we have very, very high grades. Now, about 50 kilometers downstream, the grades are not that high. Why? Because as the gold starts being washed down, the grains stay above, and the finer grains will wash down the river. So that's what happens. And we're right now here in this area where the gold is very fine, and hence the grade is very low. We're still profitable in there because there is no blasting, there is no hauling. It's just a lot of material movement with a conveyor belt with the drag lines, and you get the waste at the back filling the pit, and then you get the enriched mineral sands on the other side where you get your gold pretty much. So it's a very easy process. It's just one area of the mining activities, and it's pretty much moving material, no hauling, no blasting, etc.
Je vais insister là-dessus. On est sur un business model unique pour le minière. C'est que normalement, quand on évalue un projet minier, on regarde les réserves, on regarde. Là, on est sur une rivière. On a 150 km de rivière avec une concession à vie, avec une partie de la rivière qui est débutée uniquement. Donc, il y a plusieurs dizaines d'années, ils ont commencé où il y avait des membranes avec des techniques pas aussi évoluées qu'aujourd'hui. Là, on est dans le blé. on va pouvoir monter toute le partie de la rivière. Alors c'est pas une rivière, c'est une plaine en fait. Hein. C'est-à-dire qu'ils ne minent pas dans la rivière, ils vont dans la plaine et ils font en fait une espèce de... vous avez vu ce que c'est l'exploitation dans la vallée de l'Alliance, par exemple, du Ravin, ça ressemble à ça, sauf que c'est beaucoup plus impressionnant. Et c'est une requalification des sites après, c'est-à-dire que c'est un modèle de développement, c'est-à-dire que les chiffres qu'ils avancent sur les ressources, ils sont faux, puisqu'on ne sait pas. Ils ne peuvent pas avancer, ils ne peuvent pas dire on a 3-4 millions d'euros.
Ça peut être
additionnel. Ça peut être additionnel, ça peut être. Et donc on est sur une réserve, et c'est avec cette réserve qu'ils vont bâtir leur croissance. Et ça n'existe nulle part, parce que toutes les autres sociétés minières que je connais, qui sont sur des déposits, c'est la course, c'est une course de vitesse. Ils ont 9, 8, fois 7 ans de mine, et dans 7 ans, il faut que le cash qu'ils font, ça leur serve à aller chercher une autre ressource. C'est une espèce de tapis roulant. Là, on n'est pas sur un tapis roulant. Là, on a une vision très très long terme de génération de cash qui peut être encore optimisée. Vous avez compris, Mineros, en fait, c'est une société qui verse de très bons dividendes, qui déroulait sur la rivière. Et voilà, et finalement la croissance, pourquoi faire la croissance quand on a des dividendes comme ça?
C'est quasiment une obligation.
Voilà. Donc là, la stratégie Mineros, c'est utiliser ça en fait pour faire du levier et aller chercher de la croissance avec. Et évidemment, il y a beaucoup de sociétés minières qui aimeraient s'appuyer sur cette génération de cash pour aller faire la croissance. Pour ceux qui ont vu la présentation de FORTUNEO, Séguéla, la mine en Côte d'Ivoire, c'est 9 années de production, il y a 1,5 million d'ounces. Il y a un travail d'exploration qui va être... voilà, il faut chiffrer tout ça. Là, l'exploration, elle est contenue dans le plan d'évolution du business. C'est un modèle unique. C'est pour ça que c'est très intéressant pour boîte. Merci.
I just have a question regarding the ore composition in the ring, because it's never pure. It's probably 40% silver, 60% gold. So you have to refine it.
We don't have to refine it, or it's sent to a refinery, but usually what we send to the refinery, as you saw in the video, is 92% gold. 92% gold. So what we have in there is pretty much free gold. And you can see it. You saw it probably. It was very quick on the sands.
C'est du sable d'or. C'est ce qui a fait, traverser les conquistadors. Vraiment, la rivière Nechi, c'est vraiment c'est la rivière d'or. C'est très très impressionnant. C'est les petits grains d'or qui coulent dans la dernière étape. Il n'y a absolument aucun traitement. C'est des petites billes d'or que vous avez dans le nom.
So one of the plans for the growth in Colombia, what I'm looking for is that, please don't pay attention to the numbers that I'm going to mention here. I'm just going to make those numbers up. But right now, our grade is 0.04 grams per ton. That's actually a true number, 0.04 grams per ton. But because there is no blasting, hauling, etc., mining cost seems to be low, and that's why it's economically to mine. Now, when you look at that, your recovery on 0.04 grams per ton, you have a recovery about 85-90% of that. So you're rejecting very, very little now. You're recovering pretty much everything. Now, let's think back in the day, 90 years ago, that grade was, and this is an assumption for me, but just say that grade was 10 grams per ton. Now, when you have 10 grams per ton and your recovery is 80%, so you're rejecting 2 grams per ton. So if your cut-off grade also is, back in the day, gold prices were not as high, So your cut-off grade was high too. So you rejected the 2-3 grams per ton. You didn't recover those because they were not economic. So they went back into the river. So my idea is that let's go back and explore what we already mined. It's just like going and remining your tailings. So let's go back 50 kilometers up. Let's re-drill that and see what's in there. And I will assume, again, logic tells me that we're gonna find something that logic may not apply anyway. So, but what I'm assuming is that we're gonna find some good grades back in there, and if this gold price keep on the way they are, it's gonna be economic, and it's gonna be actually a very good mine to work and go and rework again the areas that we've been over the last 50 years. So as one of the plans for me to grow in Colombia. Now, we do have a lot of mines next to our operation. There's a lot of mines in Colombia that we can actually take a look, and if the right opportunity arises in Colombia, we are going to look at those opportunities. Now, we are also going to be looking outside Colombia and outside Nicaragua. As a matter of fact, we're going to be looking between Patagonia and Alaska. And if we get an opportunity, if the opportunity comes to us that there is a good deposit, that is a smart acquisition, then we look at it. We have cash in the bank, we have leverage with the banks, so I think we have the license to go and look for extra operations and grow the company. We have to be smart, and I like to say that when you're doing an acquisition or an M&A, it's as important to say no as to say yes. And I look at the opportunity, companies are swimming in cash, gold mining companies are swimming in cash, people get crazy and they want to depart from their money very quick. The idea is that you have to be very smart on how you make the acquisitions, where do you make the acquisitions, and make sure that once you make it, that it adds value to your company. So that is my plan and my vision. My vision is to be 500,000 ounce company between in the next 3 to 5 years. So on that, any questions?
What would be the best jurisdiction, you said, between Patagonia and Alaska? I mean, I know each deal is different.
Yeah, and you have to analyze. Right now, Brazil is a great jurisdiction, I would say. Argentina is becoming a good jurisdiction. If you look at the majors, and when I say majors, the Barricks, the Newmonts, they're only looking in US, in Canada, in Australia. So they're leaving the rest of the world for the little companies. The companies that are willing to take a little bit more risk and want to go into countries that people deem not stable, but in reality, when you look at the US, you go into try to permit a mine in the US, and it take 15 years to permit a mine in the US. You go to Nicaragua, it'll take you 2 to 3 years to permit an operation. So it's probably less risk, but the perception is that there are high-risk countries.
Plus, the cost of the capex has completely increased in the US and in Canada. Now it's pretty impossible to have a low-cost mine. You're very well positioned to know that.
I had 2 questions for you, and 3 actually for him as well. Prepare so far. One of the first ones, I've seen the optimizing performance or the growth that organic growth that you're expecting. I wanted to know how dependent on the cost or the price of gold is the company to actually indeed allow this growth that you're expecting, or this roadmap that you're doing. Would a drop on a gold price would affect, the future investment or the future growth that you're expecting on the company?
I think, and what I said at the beginning, that's probably what we need to look at, our cost structure first, to make sure, because we don't control the gold price. So we need to detach ourselves from gold price and make sure that we have a cost structure and performance that even with low gold prices will allow us to grow.
So that's a risk that is taken into account.
Correct.
And I have two more questions regarding.
I think he
yes,
still has some more questions, so and then we come back to you.
I'm going to add to David's answer. Remember, gold hasn't been sitting at $3,500 or $3,200 an ounce for very long, and this company's been consistent dividend payer for 4 decades. So, and that was through considerably lower gold prices. So, absolutely, to David's point, we need to make sure we're disconnected from the gold price, but we've proven to be profitable through a 4-decade gold price cycle. So, pretty robust company.
That brings me to my questions to you. So on your presentation, you did talk about the market cap that was about 600 million Canadian dollars, I believe. Do you have any goal or expectation for the 5 next year, if you have a goal on market cap that you want to reach, or the company is at least expecting?
So, I try not to predict the future. Somebody braver than me or smarter than me is going to have to do that. What I do is look at Calibre, who operates or who historically operated in Nicaragua, and Aras, who historically has operated in Colombia. These are 2 companies that have very, very similar production profiles to ours and significantly higher market caps. So my first job when I came in through the door was simply to get on the road and start to raise awareness of this company so that people would understand when you want a gold producer that you're going to consider us in that mix. And if you didn't know who we were before, now you do, hopefully. So I didn't answer your question on purpose because I do think that we should. So Scotiabank came out with a report late last year and said that junior, intermediate gold producers should be trading at 6 times enterprise value to EBITDA. At the time, we were at 2. So if you think about it that way, then if we should be trading at 6 times, then we've got, I don't know, a $6 share price, based on those metrics.
And the last one as well, you talked about, I believe it was on the sequence where you showed the free cash flow. You said some of it was on Colombian pesos, and you said you indeed mentioned that it was devalued somehow to the US dollar or the Canadian dollar. Is there a Colombian pesos risk as well involved on the metrics that you show, or not necessarily on the adjusted EBITDA and the net debt, or the interest that you pay? So the debt, I believe, was on pesos, on Colombian pesos.
So interest payments will be in Colombian pesos, and our financials are denominated in US dollars. So one of the things, so I'm hoping you'll take the time to dig into the company and at least look at last year's financials. And what you would have seen last year is our costs ran higher in Colombia than expected because we had budgeted for a weaker peso versus against the US dollar than we actually experienced. And accordingly, our costs were higher, right? Because labor costs are higher in Colombia. But that was, so there is exchange rate risk, and we do not currently hedge for it. And the Colombian peso has subsequently started to weaken or look more like it usually does. So hence you saw the first quarter all-in sustaining cost below.
Just a comment on that. When the Colombian peso had been hovering between 3,800 and 4,500 pesos per dollar for the last 4 or 5 years. Only when the current president came into power, it went all the way to 5,000. Obviously, because people saw a lot of risk with the new government. Once kind of everything settled, it came down again, down to around 4,000, and it's been hovering between, 4,000, 4,300. So it varies and it goes in the values, but not an accelerated devaluation like you saw in Argentina or Venezuela.
Yeah, that's kind of the conclusion that you guys. So
Yeah.
hedging it wouldn't be necessary.
Correct. Correct. Mhm. Okay. Thank you. Sorry.
So yes.
Okay.
So I have two more questions. I did not find any information about a share buyback policy plan, as UP are developed a lot at the moment. So do you plan, I don't know if you can answer directly the question, but do you plan to open one in the near future?
So in terms of the buyback, we actually got approval from the board, from actually the generals, from shareholders, to buy back about $2 million worth of shares. We're still working on how it is that we're going to do it, where we're going to do it. We're probably going to do it in Colombia, but that's the plan. Second question?
No, it's a short question.
Okay.
Will you plan to serve a special dividend again in the near future, as the gold price have never been so high before?
I think that, again, that's kind of a tricky question. In my view, and again, I've been with the company for a little bit over a month. But in my view, when the shareholders request a dividend, they usually do it at the General Assembly. So it was not requested. So I don't think it's going to happen this year.
Because your main shareholder is that private company.
Now we have the main shareholder, and which is Sun Valley, and he may answer questions later about Sun Valley, but they're not interested in getting an extra dividend. They're actually interested in share appreciation and growing the company. So if we want to grow the company, then we need to conserve cash. Correct, and make sure that we invest.
The market cap is about 500 million US.
Above that.
Yeah, above that, which is not a small cap for this sector.
Big enough for me.
Yeah, but can say it's a mid cap. You mentioned that the awareness of investors is starting to grow because you are on the road and speaking to them. And what is the profile of the shareholders? I mean, you mentioned Valley is maybe one of the main shareholders. But do you have like institutional?
So I seem to have lost my slide on my investors, but let me see if I can find it. We had a presentation and I had to skinny down some slides. So
There you go.
there we go. Okay. So it's important to understand the last 15 months. So when I first looked at this company, 11% of the shares were in Canada and 89 plus or minus of the shares were held in Colombia. And the reason why 11% of the shares were held in Canada was because in 2021, late teens, the previous CEO was frustrated with his attempts to do acquisitions or to engage in mergers, because part of the payment would have been our shares. And a lot of acquired cos or people we would have paid our shares to for assets didn't know what they were supposed to do with a relatively illiquid Colombian traded stock. So he told his corp dev team, put your pens down, we're going to go get a listing on Toronto. The challenge for this company has always been it's so profitable, they didn't need to raise a lot of money. In fact, it would have been quite silly to raise a lot of money and then dividend it back to the shareholders. So they raised a very small amount, so you had 11% sitting in Canada. So then what happened is February, Sun Valley, in a private share purchase agreement, buys out a family office or a banking consortium in Colombia named Colpatrian. So they take down 30%, their 30% of our shares. And then over the first quarter, they did an OPA in the Colombian market to pick up another 26% of the shares. So they now own 57% of the shares, with the second largest shareholder being Cooperación Financiera. So today, about 70 to 75% of our shares are sitting in Canada, and 25 to 30% are sitting in Colombia. So we've had just kind of this revolution in our shareholder base. And when I first started looking at the company was at 65 cents. And shortly after the share purchase agreement was announced, the share purchase agreement was announced at 84 cents. And shortly thereafter, the stock ran to about 90, 95 a dollar. So we seem to have disconnected from that. My observation is that the Colombian market, because it has 65 companies, because most of them are dividend payers, the Colombian investors are looking for a dividend and not interested in capital appreciation. So we seem to have disconnected from this valuation based on a discounted cash flow, like a discounted cash flow analysis of a dividend stream, and then NPVing it back. So that's one of the issues that this company had, is that because that's how it was trading, it was really difficult to get appropriate valuations until we could disconnect that link. Does that answer? Sorry.
There have been mentioned on the Canadian market about the impact of short selling for junior companies, and I don't know if anything is being thought or organized, to counter, this trend. And I cannot remember who was, but there have been many complaints, about this, And given your low valuation, it is very attractive in terms of yield and your growth stories. I was thinking, what are there any steps being taken?
A gentleman named Terry Lynch is leading the charge on trying to nail down naked short selling in Canada. I have actually engaged the services of a share monitoring group.
Yeah.
And we are watching it very carefully. I would say this: it's less likely somebody's going to want to naked short our stock, because you're going to have to do it in very short time periods. The issue being is we're a dividend payer.
Yeah.
So when you pay dividends, you mess with a short seller's ability to because if the market went against them and the timing was wrong, it's easier to mess with an Explorco or a developer's shares because they don't have that revenue stream and they're not paying a dividend. Fortitude Gold has taken it to the extreme. They pay dividends monthly so that they can bash the short sellers on the head or on the nose regularly. So that's one of the techniques that we can employ. So I haven't seen it in our shares. Like, I haven't seen that kind of volatility. I have seen arbitrage trading between Colombia and Canada that was truly white knuckling. Like, it was just, we had a day where the Canadian market was closed and the Colombian market was open. There was a big arbitrage spread. So somebody of a trader in one of the big 6 Canadian banks waded into the Colombian market, bought as much shares as they could get their hands on, and dumped it all into the market on Tuesday morning. We were down 12% on record earnings, and I was just not happy. I was not happy. So,
if I understand well, most of the costs come from the infrastructure development, usually when you develop a mine. So in your case, do you have already roads who drives to that area? Do you have some infrastructure in place already, or you have to build everything? Because most of the costs come from that development, in my opinion.
Yeah, the mine, our operation is about 2 kilometers from existing operations. So most of the infrastructure, like roads, electricity, power, etc., it's already built in. So we just need to
extend a bit
exactly.
the infrastructure.
And the biggest one is probably going to be the decline or the ramp down in at the mine, and then the earthworks where we're going to build the plant. So that would be the biggest. But yeah, it is like I mentioned in those yellow lines. We're within an area where it's a mountains area, but it's already been developed because we have 2 operations, hydroelectric plants, and etc. in the area. There are some areas where you do not want to develop anything because as soon as you develop, then illegal mining activity comes in. So you don't want to make it easy for them. Yes. With these gold prices, illegal mining activity is going on everywhere. And I was just looking at the news from Peru, a couple of weeks ago, where some people were killed. And that's, because illegal activity. So, any other questions?
You mentioned a potential acquisition. You also give a timeline which is 3 to 5 years. But are you actively looking now, or do you feel you have to do it? This is a good timing, or it's just if it's happened, it's happened. But because you mentioned you were quite selective and you know how to do that. It's important to be able to say no. But on the other hand, are you actively looking right now?
A few answers to that one. So you can see that the market has been very active for the last actually 2 to 3 years, with mergers and acquisitions, etc. So, but at the same time, there are small companies that are in our range of production, which is between 70 to 120,000 ounces, that are looking for someone to acquire them or for a joint venture, merger, etc. So you get information, you get requests, you get calls from the banks saying, we have this asset, are you interested? And so what we're doing is, okay, let's take a look and see if kind of a scoping study or a desktop study tells you that, okay, it makes sense to continue looking, then we'll say yes. And if not, then we'll stop. But we are being actively pursued to look at it. So actively being sent information.
And on the other hand, do you think you can be a target? For you mentioned the market is quite active and maybe a company with a market cap of 2 to 5 billion. They want to secure.
There is 2 things that we have in our defense, and I'll let her explain a little bit at the end. But the first one is that we do have a large shareholder, Sun Valley, which owns 57%. So it's pretty much that's a big difference in there. And the second one, the companies that can take us over, they're looking into the North America market or Australian market or New Zealand, and they see Nicaragua and they kind of turn an eye on that, and they see Colombia and they see risk. So that's another defense that we have right now. You want to expand on that?
The only thing I would say is it is possible that there might be a price at which our major shareholder would be prepared to divest himself of his shares. But given he's just acquired them and given his stated intention and his aligned values and strategy to grow the company, I think that if I had to put odds on it, they'd be less than half, or less than 50%. That would be my guess. But you know what? every once in a while stuff gets sold for dumb money, right? Like, so if somebody wanted to, as we say in English, pay stupid, then you might get a sale. But I can't see it, given the view and the strategy and the vision.
Any other questions? Anyone?
For me, I like a lot that you take care of environment, of no cyanide, no mercury. That's the future. It's good.
Yeah, and that's actually one of the great things about our operation in Colombia, is that because it's pre-gold, so it's gravity separation. It doesn't need any reagents whatsoever. And on top of that, I will say 100% of our electricity is self-generated. We generate electricity with our own hydroelectricals plants, okay? And there's gonna be years when we have a drought, then we have to go and buy from the government, we're interconnected to the state distribution system. But there will also be years where we have extra electricity and we sell to the government. So, as a matter of fact, part of the $160 million in revenue is about $4 million in there that comes from electricity selling. So it is a very, very green operation.
Is that a competitive advantage in other competitors using this type of sustainable extraction, or most of them are, chemical oriented, or have those risks about sustainability, or you don't know?
No. It's again because we don't have to blast and we don't have to use reagents. As a big advantage for us with our competitors, but it's also a big disadvantage because illegal mining activity, they know, okay, this is easy, so they try to get into some places and do the same thing. And we're talking about recoveries, and we recover between 80 and 85. Some people in some of the areas may use mercury and recover pretty much 95%. So, and busted. But yeah, that's a disadvantage. But it's a big competitive advantage for us with the big producers, let's say.
We've lost.
All right.
We've lost it all.
If there are any more questions, I think, I don't know, did everyone have breakfast?
Thank you.
Thank you so much.
Thank you very much. Thank you for attending.
Voilà.
Spécifique de l'or alluvionnaire, on est sur un processus entièrement mécanisé, donc sans aucun produit chimique, avec une fin de production, on l'a vu dans le film, vraiment à la fin de la production. C'est un procédé propriétaire de séparation des sables, et on a vraiment une exploitation qui permet d'avoir de l'or sans aucun traitement chimique et sans aucun cracking, sans dynamite. On est vraiment dans une pure exploitation alluvionnaire. C'est assez impressionnant. Il faut savoir que la rivière Nechi, historiquement, c'est la rivière colombienne qui a fait tourner la tête de nombreux conquistadors. Et c'est vraiment quelque chose de très, très, très impressionnant à voir. La vidéo ne le montre pas, on est sur une exploitation qui est absolument immense. C'est-à-dire que la propriété de Mineros, c'est, il faut vous imaginer, donc non pas une rivière, mais en fait une plaine alluvionnaire de 150 km de long. Et c'est une zone qui a été couverte depuis plusieurs dizaines d'années, mais il y a évidemment un potentiel
potentiel de dragage, vu que ce sont des grosses machines qui dragent. Il y a un potentiel de dragage qui est absolument colossal. Et on a du mal à avoir les bons chiffres avec Mineros. Pourquoi? Parce que je pense vraiment à un site d'exploitation où les forages ont indiqué une certaine réserve. Là, on est sur une zone alluvionnaire. C'est-à-dire que les forages qui ont été faits sont toujours dans un périmètre restreint. On sait que ces forages vont être augmentés par la suite. C'est-à-dire qu'on a un potentiel, on a un business model de croissance d'exploitation qui est absolument unique dans le marché auriculaire. Avant d'aller en Colombie, je me suis dit il faut que je vois ce que c'est un site alluvionnaire. À chaque fois que je parlais avec des analystes sur l'alluvionnaire, on me disait va pas voir ça, l'alluvionnaire c'est dégueulasse, ça fout en l'air les rivières. Et je voulais voir en fait l'exemple environnemental. Voilà. Et je peux vous dire que retour de Colombie, c'est ce qu'il faut faire dans l'alluvionnaire. Il faut arrêter de dire que l'alluvionnaire ça détruit l'environnement. Ça le détruit quand on fait les choses mal. Et c'est vraiment une visite qui vaut la peine d'être faite justement pour revenir un peu sur les idées toutes faites qu'on a sur l'exploitation alluvionnaire qui a un problème environnemental, que ce soit à Madagascar, en Guyane, ici en Colombie, les choses sont faites vraiment dans un respect environnemental qui est assez impressionnant. Il y a la requalification ici. Anne en a parlé, il y a des réinstallations de familles et de groupes de familles, de fermiers sur les sites réhabilités. C'est vraiment très impressionnant. Yeah, the extraction goes on the Colombian side last quarter.
Upside, so exploration upside or improved performance upside. And there are a lot of those that are, talking on knocking on our door and asking, well, are you interested? And that's something that we're going to be looking at and make sure that, one thing that I like saying is that for an acquisition it is as important to say no as to say yes. So we need to be prepared to say, sorry, no, there is no upside in your asset, or let's take a look and see where do we have the opportunity if we make that acquisition to grow and to make that acquisition to add value to our company.